Welcome everyone to the first ever BlockFuel Live powered by Stocktwits. So super excited. I'm Avi Mash. We got my co-host Jody Flournoy as well as a distinguished guest, Zac Townsend, CEO and founder of Meanwhile. So if you guys don't know Zac, he's incredible. He's got a prolific background. He started off as, I think you sold the company, then you became the chief digital officer of the state of California. You got funded by Sam Altman, who everyone knows, as well as Gradient Ventures. I won't go through the whole list, but a number of big names. So first and foremost, welcome, Zac.
Happy to be here, Avi. Always good to see you and Jody.
Exactly. So, and for those unfamiliar, I guess we got to probably kick things off with who BlockFuel is. You guys, we have our own podcast. We're going to be doing this live weekly with Stocktwits, and we bring on founders, innovators within the blockchain space. I had a previous podcast called Pounding the Table that came from the stock market. So we're going to try to weave, since a lot of you guys are stock fanatics as well, try to weave some things from the stock market in, bridge that gap essentially from crypto to traditional stocks. So Jody, take it away, man.
I'll take it away. So as we've done with our own podcast is we want to focus on real things, actual either real yield, real assets, and not be, shill on you guys stuff that we're buying and dumping on the side. So I think bringing on Zac, someone that early on, just like Michael Saylor, saw, hey, there's going to be a complete Bitcoin economy. So if you've ever read the book, The Bitcoin Standard, if not, we'll link it. You should read that. It's showing that, as Bitcoin becomes a bearer asset, as it becomes a reserve currency, there's going to be a massive economy built around and on top of Bitcoin. Michael Saylor's already showing that. We're going to dive into that today, some of the things that he's doing. He just had a new release, a new bond product release this week. But we also want to bring on Zac, because he's someone that also had that vision to say, hey, I want to be the Warren Buffett of the Bitcoin economy. I know that insurance premiums are a massive way to build, certainly a big company, as well as finding good strategic ways to avoid taxes in a good way, right? In a legal way, if you are participating in this Bitcoin economy. So Zac, first of all, as a Bitcoin life insurance company, wanted you to kick it off. Just explain real briefly, what is Meanwhile?
What is Meanwhile? Well, it's a Bitcoin life insurance company, Jody. You said it yourself. So look, I think your framing is exactly where we started from, right? We believe that there is a Bitcoin economy, and that economy is going to grow. It's global, it's decentralized, it's unique of all the economies in the world, and that there's no government, and that is amazing, and that it's going to grow over time. Right now, that economy is small, but it's best to think of it like an emerging economy. And then any emerging economy and any robust economic system has a bunch of financial institutions. And we're building one of those defining financial institutions, right? If you look around all the countries of the world, there tends to be a life insurance company. And we're that life insurance company for the Bitcoin economy. What are we practically? We have a company in Bermuda. It is regulated. Bermuda is not the Bahamas, not where FTX was, not where the shady stuff happening. Bermuda is like a legit place. It's where Chubb is based, and Munich Re and Swiss Re have subsidiaries there. It's like the insurance capital of the world. And we worked with the Bermudian regulators to start a company there that is entirely denominated in Bitcoin. So it takes premiums in Bitcoin, it pays claims in Bitcoin, it does its audited financials in Bitcoin. For us, we truly operate in this new Bitcoin economy where one Bitcoin is one Bitcoin. We don't ask ourselves every day, is the price of Bitcoin 85,000, or is it 115,000, or is it 15,000? It doesn't matter to our company. Our earnings, our reserves, our regulatory filings, all the promises we make to our users are entirely in Bitcoin. And then what we provide is this critical financial service. So life insurance is the oldest savings product in the world. It is a critical way for folks to think about long-term savings for their children, for their loved ones. Our ultimate vision is, if you're a middle-class person in Argentina, you don't buy life insurance because you're going to live longer than the Argentinian peso. And there are people here in the U.S. who can feel the same way about inflation risk. If you bought a life insurance policy in 2020, you've seen the purchasing power of that policy go down 25%. But we didn't exist then. But if you bought a 10 Bitcoin life insurance policy in 2020, obviously you would have seen the purchasing power of that really increase over time. And then, as you say, Jody, exactly. Like basically every country in the world that has taxes tends to have tax privileges and tax benefits for life insurance. And by the way, that makes sense, right? Like as a society, you don't want orphans and widows to starve, right? So you want to incentivize people to save to protect their family. And those tax privileges, apply equally to our policies as they do, to whole life policies sold by MassMutual or New York Life or Northwestern Mutual. And then we go through a lot of effort, which I will not bore the people with here, to make sure that our policies comply with the Internal Revenue Code about what is and isn't life insurance. So people are buying life insurance in Bitcoin from us exactly because they want to protect their family in a inflation resistant appreciating asset combined with some good tax benefits.
So Zach, is if I were to buy a life insurance policy, I would give you Bitcoin, is that correct? Or I'd give you cash and it'd be denominated then in Bitcoin?
Yeah. Give isn't the right word, perhaps, Avi. You pay us in Bitcoin for a valuable service that we're providing. But yes, so a typical policy for us really ranges in all sorts of sizes, right? So we have folks who do policies as low as 1 Bitcoin. We have folks who do policies as big as 30 or 35 Bitcoin. We put a limit on it because we've had some users be like, can we buy 1,000 Bitcoin policy? And I'm like, no, because if you get hit by a bus, we're screwed, right? So we're very careful on risk management. We're very careful on underwriting. But yes, the fundamental policy is like, you pay us, let's say 1 Bitcoin. You do that over 10 years. So you pay like 1/10 of a Bitcoin a year, every year for 10 years. That's to comply with some of those tax rules I talked about. You need to not pay it all up front. So you although prepay, but you pay us 1/10 of a Bitcoin a year for 10 years. And then we promise our policyholders a fixed guaranteed payout when they die. So our policy is whole life. It's well named because it lasts your whole life.
Yeah.
There are other policies called term life, which probably people are more familiar with, that they last a certain term. They're very well named. So whole life in Bitcoin, right? So you pay me 1/10 of Bitcoin, and then I promise you 1.5 Bitcoin or 1.3 Bitcoin, depending on your age.
And then just I find this fascinating. I think the biggest point is you said Argentina pay. Am I good? I thought my mic was off for a second. You said Argentina going to be going. Many people see the U.S. dollar also, not necessarily dying off, but we've seen the inflation, right? And so I think what you said there is insane. And if anyone's listened to Michael Saylor, you see Bitcoin. Obviously, the hope here is that it goes up. Now, the risk is Bitcoin goes down. You buy 1 Bitcoin policy. It's still 1 Bitcoin, but the payout obviously will be lower. Correct. Got it.
Well, the same in Bitcoin terms, could be lower in dollar terms, right? But I think one of the fundamental things that, look, if I knew what the price of Bitcoin was going to do tomorrow, maybe I'd run a trading shop, right? And I don't, but I believe in Bitcoin. I think as Michael Saylor does, as a long-term asset. The question isn't the price of Bitcoin today or next month or even next year. It's a decade from now, 20 years from now, 30 years from now, right? So most of our policyholders are, between 35 and 55. They're somewhere between a serious relationship and 2 or 3 kids, right? These folks, knock on wood, are not gonna, they might aren't gonna die next year, right? Like they're gonna on a social basis, most of them are gonna live a long, healthy life, um, and that is exactly, I think, what the concept of hodling is about, right? There's this,
Mm,
a hold on. I mean, originally maybe not, but I think what it's become a lot about is like intergenerational wealth, like retiring your bloodline, as some people say, right? And like that is what life insurance is about too, right? Like
mm,
there's this real connection between Bitcoin as a long-term store of value and life insurance as like a way to save for your your loved ones forever in a tax optimized way. And we just want to provide that to users so that they can stop thinking about. Anyway, what you said is just like, yes, you could get really unlucky and like
yeah.
Bitcoin could be worth less. But if you look at the price of Bitcoin, like over, I think, any 3 year period, even from lows or even from highs in the history of Bitcoin, like
Mm,
you've appreciated in dollar terms.
yeah.
What we've I think I told you about this, but I got up to speak in front of our like local Bitcoin meetup in Oregon, and talking about Bitcoin related financial products. And you have this sentiment with Bitcoin maxis. It's all about self custody. It's all about not your keys, not your coin. We've learned that centralized exchanges can fail. Bybit recently got hacked, so we're not over that. But I think beyond that sentiment is that for the average person, self custody is not easy. Stocktwits audience, like the people
Yeah.
coming into this space, they don't necessarily want to trade with a ledger and have to sign a key every time, or hold their assets and then like figuring out how to tell their spouse, or like how tell a trustee of their trust to be able to like log in and then be pull out the Bitcoin after they pass away. So what I recommended, and not a financial advisor, not financial advice, is diversification with how you hold Bitcoin. If you believe in Bitcoin, if you believe it's going to million, 10 million, in 20 years, is having tax advantage ways. So I have a Bitcoin IRA, like a Roth. I think throwing Bitcoin in there early on is great because I want it to like grow tax free. If I ever need to pull it out and buy a second home or pay for college, or pay for grandchildren's college, I'm able to do that. Also, I'm not having to custody that Bitcoin, so I can manage my own stack, but I'm not, this like sliver of a stack is in a Bitcoin IRA. Same with you guys, is this is a way to
Exactly.
diversify and do so in a tax advantage way. So ideally, like for, as we want to educate the audience, it's like, hey, Meanwhile is going to take on that custody aspect. So you're not, dealing with the private keys yourself. They're also growing that Bitcoin through this policy. And then I think the cool thing too is, as we get into tax season, and I want to dive into this more, is the ability to borrow against it. Could you chat a little bit about that so we can kind of better understand, hey, like I can get like a little HELOC coming off of this
Yeah, yeah.
Bitcoin?
Yeah, well, let me just start by saying you're touching on like the practical reality that like we end up having two different types of like policyholders. And there are people who are like Bitcoin native. They've been in Bitcoin for a while, or they just like think of themselves and like as being native to Bitcoin. And for them, it's often exactly as you say, it's a diversification, right? They might have a bunch in a ledger, or they might have a bunch in Coinbase, or they might have diversified. And for those people, maybe they're putting 10% of their Bitcoin in a meanwhile policy. And then we have another set of user who isn't doing that, like doesn't have a ledger, doesn't think about self custody, and they bought, 1 Bitcoin, 5 Bitcoin, 25 Bitcoin, whatever. Um, and they're planning to hold it for a long time. They might be rich for other reasons. They might have other investments. And for them, it's like, well, the tax box is what really matters. So what is that like the tax benefit? There's basically four benefits of the policy. The first is protection, right? So literally you get hit by a bus tomorrow, you're getting, in my example, 1.5 Bitcoin instead of 1 Bitcoin. The second is that savings of turning 1 into 1.5 or 10 into 15 is, if you could get yield on your Bitcoin, which by the way is really difficult to do, and like we are really only able to do it like as an institution that like is working really hard at it. But even if you could, as a policyholder or a person, get yield on your own, every year you'd owe interest income. You'd owe income tax. But inside the policy, we're compounding that value to get to the 1.5 like tax free. So in that way, it is like an IRA or a 401k, right? The savings is accumulating to you as expressed in how much we pay out to you in this compounding way. And the third thing is, yes, like a HELOC, there's an account value in all whole life policies. Our account values are in Bitcoin. That account value is like accumulating over time as you pay into the policy, as you get older. And then you can borrow up to 90% LTV against that account value. But the amazing thing is we're lending to you tax-free in Bitcoin terms. What does that mean? One, no margin calls, no maintenance, no possibility that you can get blown out of your position because the price of Bitcoin goes up 50% or down 50%.
Yeah.
So that's the one thing. The second thing is we actually don't expect people to pay back. Now there are some like people who have crazy ideas, they'll borrow, they'll pay it back when like Bitcoin goes down, whatever. But most people, the idea is exactly what you said, Jody. You like want to buy a house in 10 years, you borrow out of the policy, tax free. And then we're just charging you interest, but you can never, the interest can never become more than we owe you. A bunch of math there. So what do? You actually just die. You don't pay the loan back, and then it's netted against what your kids get, right? And then the third thing is I keep saying tax free. What does that mean in practice? What it means in practice is you're getting new tax basis Bitcoin. So if you sell it that day, you don't owe any capital gains tax. So you put Bitcoin in our policy, and then Bitcoin goes up to $1 million a coin, or whatever, whatever Michael Saylor, outrageously high number that's difficult to contemplate. So when that day comes, you can borrow a value out of the policy, and you won't owe any capital gains tax from here to there.
Now, do you guys have plans? ETH is not like the hottest thing right now, but it's been talked about, kind of parallel with Bitcoin for quite some time. Bitcoin obviously remains king, but has there been discussion about that, or do you foresee that in an ETH-based one?
Let me answer it two different ways. The first is, look, I have a lot of respect for ETH and Solana and Avalanche and as these like computational platforms. And if you want to have a conversation about like a global decentralized like ledger of information and computation, like I think that's super interesting. I don't have an opinion on who's going to win in the 50-year time frame. And that's sort of what's important is I don't think of those tokens as, I don't know if offend anyone, like durable stores of value. That's not their purpose.
Right.
Their purpose is something else that's important. So to build a life insurance company around a currency, I think you have to believe it's going to be here in a century. And not only be here, but like retain its value. And I don't have an opinion about like ETH as a store of value. I might have an opinion of it as like something else. And that gets to the second point of like, I think there are really two great stores of value in the world. I'm sort of going to contradict my earlier inflation comment. I think there's Bitcoin and there's the US dollar. And I actually think what we're going to see over time is the whole world is going to Bitcoinize and or dollarize. So I think like the Argentinian peso might be kaput, in time, I think there'll be Bitcoin, which I think is the best store of value. But then I think a lot of countries, a lot of individuals are going to, dollarize and or Bitcoinize. So if I looked out over the next year or 5 years, we're most likely to start a stablecoin life insurer to like match our Bitcoin life insurer. And then if you are that Argentinian or a Nigerian or a Turk, or yes, even an American, you come to our website and you would like make a rational decision about like how much of my savings for my kids do I want in Bitcoin and how much do I want it in stablecoins? I think that sort of makes a lot more sense than like, I'm going to put 80% of my 100-year store of value in Bitcoin and like 20% in ETH.
Yeah, really what's super topical right now is MicroStrategy, now Strategy. We had the pleasure of meeting Michael Saylor last week in New York. Very friendly guy in person. But what separates Michael Saylor from me and beyond the, almost 5%, 2% of Bitcoin that he will eventually own is that he's very smart on corporate finance. So financial engineering, building these very interesting products on top of, Bitcoin as like the base asset. So it's been fascinating is to follow, beyond strategy and MSTR as the stock. And for Stocktwits audience, that's something they're very, familiar with.
Or
very
today, GME too.
GME,
Yeah,
and exactly. So we're starting to see these Bitcoin Treasury companies come about, and then we're starting to value, and it's becoming more known of like, hey, this is going to be a very volatile asset, and it makes it super interesting. So as we had Bitwise on and Jeff Park and Ben Workman, and we were talking around, hey, the thing that's really cool is that if you sell a MicroStrategy bond, it has way more volatility. It's way more juicy than any other bond that you can buy. And so this asset is very unique. It also converts, if you hit the certain 130% of par value. So where I'm getting at is someone like Strategy released a new set of bonds today, STRF. So we're starting to see how that is going to be valued as well. For Meanwhile itself, you're in the same, I think, category of building financial products, right, on top of Bitcoin. And people are starting to pick up on, hey, this is super interesting because this is where institutions come in. This is where, hey, they have a mandate. They can only buy bonds. They can only allocate to bonds. So they want to get the juiciest bond they can. How do you, when you think about like Saylor cooking up some crazy financial engineered plan, like, I know that your head is always spinning. How do you think about like, okay, Meanwhile should get into this product, just like he's getting into bonds, like what are some stuff or some things that Meanwhile's thinking about we should do that?
Look, I agree with you that Michael Saylor is like unparalleled in his ability, I think, to use the particulars of like the dollar corporate finance system to like figure out how to get more Bitcoin. I've also talked to Michael a couple weeks back. I think that we're doing something complementary and a little different, which is our desire is for there to, and what we work toward is there being a Bitcoin economy. So in some ways, we want to bring the tools of corporate finance to being in the Bitcoin world rather than using the tools of corporate finance to buy Bitcoin. Although I think that is incredible and like I own some MSCR, and I'm not that I'm not your financial advisor. I'm not necessarily recommending it, but and I should have bought some GME yesterday. I understood it was coming. But so for an example is I'm working with some people, nothing to announce, something particular, on doing a corporate bond, very straightforward like bond issuance with a coupon, like not anything fancy, like a bond from the 19 tens or the 1810s, but having it be entirely in Bitcoin, right? So that the borrower is getting Bitcoin, us as the like person organizing the bond, the buying a bunch of the bond or representing the creditors, are giving them Bitcoin. The yield is in Bitcoin. So like that's our ultimate vision, is that some significant portion of the global economy will Bitcoinize. And that means that as an individual, you want to have, again, some long-term exposure to Bitcoin. But as a corporation, it means that we believe there should be debt capital markets and eventually even like equity capital markets in Bitcoin. Now, that's not playing the vol, but if there was a stock exchange where the bid asks were in Bitcoin terms as a currency and MSTR was listed there, it would be a lot less volatile.
Yeah.
Right, because then you can just say like, well, what's the multiple on their book value, all in Bitcoin terms, right? So we express that ourselves by having audited financials that doesn't have a dollar in the corner, but has a B. And every line item in the income statement and the balance sheet are in Bitcoin. We express that in like trying to develop capital markets and assets in Bitcoin terms. And I think that MicroStrategy will get there, but they have a lot of like runway to fly, or now just breaking down. They have a lot of space to like exploit um, the dollar capital markets before I think they'll work on it.
Mm. So you got a little ahead of GME, that big news that just happened. Do you foresee like other companies? I remember when I was in Miami, we were listening to Sailor speak, and he was talking about when he went to Microsoft, and they didn't end up going with their corporate treasury. But one thing that stood out to me was the fact that he was just talking about inflation. He's like, all these companies are sitting on dollars that are losing value over time. So you're actually like losing money for the shareholder by just keeping it in cash, right? So do you foresee a world, and it sounds like you do, based off, building meanwhile, and then what you just mentioned, but like, have you been talking? I know you talk with a lot of folks. You got money from Sam Altman. Have you started to see, I don't know if my internet's a little off here, but if you guys can hear me, do you foresee a lot of other companies? You guys can hear me?
Yeah. I think like fundamentally,
it's showing
we're seeing the institutionalization of Bitcoin. And I think that will come in two flavors. One flavor is like driven by MicroStrategies, driven by GME, which is this idea of Bitcoin as a treasury asset as an inflation hedge. And I think there will be more and more companies. Now, eventually the multiples, the arbitrage that MSTR is seeing won't be as good for others, right? So like Meta Planet, super interesting if you're in Asia and you want exposure to Bitcoin treasury, right? So I think we're in a phase now where it's like Bitcoin as like novelty asset. And then I agree with what you just said, which I think Bitcoin will turn into like durable store of value, just as it is in our life insurance policies. So too is it in corporate treasuries. And then I think the third step will be like Bitcoin as productive asset. Like that, if you want to interact with certain parts of the the global economy, you will need Bitcoin. And then, so won't just be like gold on the balance sheet. It'll be like currency that you use. And just as Microsoft needs euros and yen and Swiss francs to like conduct their business, even if like their treasury might be in dollars or it might be in corporate bonds or like whatever they're doing with, I presume they're hundreds of billions of dollars from their balance sheet. They'll also be Bitcoin as just a thing you need to function in the global economy. And I think each of those stages will see a certain number of companies. So like right now we're in like Bitcoin as novelty treasury asset. And you have 100 public companies that are like that, and there'll be more every day. And yes, that's probably a great way on some time frame to make money. And then we'll start to see people who actually believe this story, an accurate story of like Bitcoin as store of value. And then there won't be a press release when the 400th public company buys Bitcoin. That'll just be what a public company should do with 10% of their treasury. And then the like third phase is like, oh, we're using Bitcoin to, buy assets, or we're using Bitcoin to settle large cross-border transactions, or then it's not even that Bitcoin is like the thing you're just buying and holding. It's Bitcoin is a thing that we need to conduct some portion of our business.
I agree with that.
I was doing my taxes last night and I got hit.
Wow, sounds like a rip-roaring good time, Jody.
It was depressing. It kept me up. So I get hit with this nasty bill because like, you buy and you sell and you buy a lot. And then this year, a lot of the assets that I bought are all the way down. And then, but by the end of last tax year, they were up. So I'm paying capital gains on assets that aren't no longer as valuable. With you guys, you're rolling out a new product. and want to chat on this because it has two functions. It's both super interesting for the users of the purchase parity agreements, but it's also helps explain how you get the 1 Bitcoin I distribute or I give into the policy and get 3 Bitcoin out.
Yeah.
Like, I know people that are going to be like pulling back the layers are going to say, hey, how does Meanwhile do this? Are they like Celsius? Are they like, some of these other, centralized exchanges or centralized lenders? So could you touch on some of the parity agreements that you guys are rolling out as financial product?
Yeah, I mean, you touched, or you definitely said like where this came from, right? So we make promises to our policyholders, promises that we need to keep for decades to come. Promises, by the way, that the Bermuda regulator and our independent board of directors and our chief risk officer and chief compliance officer are all working to make sure that we are prudently working on. And what you can boil that down to is we need to get about 3% returns in Bitcoin terms. So we need to turn our pile of Bitcoin into, 103% of that every year. So what we do is we basically engage in credit. Now, because our yields are our target yields are pretty low, compared to the crazy shit that BlockFuel and Celsius are doing. I think we can be really safe. And fundamentally, what we have in this space that no one else has is we have duration. We have time. Like people are trusting us with their Bitcoin for a really long time. And what we do is we're able to work with counterparties to give them duration, but what we want back is credit protection. And that is how we came up with this product. So yes, it turns out by the rules of repurchase agreement, the tax treatment of repurchase agreements, you can give me Bitcoin and retain your tax basis on that Bitcoin, and I can give you back Bitcoin. If you want to be extra careful, I can give you back wrap Bitcoin or CBBTC, so it like even probably has a better tax position. So what does that mean? It means you have a bunch of low tax basis Bitcoin. You don't want to sell it. So you send that to me, and I send you back high tax basis Bitcoin. How do you familiar with this, by the way? A miner. So there's a miner. They have a ton of Bitcoin on their balance sheet, but they mined it, when it was at 20,000. They elected to do, like first in, first out. So if they sell Bitcoin, they're having to, every Bitcoin they sell, like 30% of it just off the top goes to capital gains tax, right? But they like literally need to pay for electricity and salaries and like buy rigs and stuff. So what they did is they sent us a bunch of low tax basis Bitcoin, and then we sent them a bunch of high tax basis Bitcoin, which they then sold. And they didn't owe any capital gains tax, and then they're paying us back the loan over time, like with their Bitcoin cash flows. So we've had people who do this because they want to pivot into micro strategies, but they don't like want to sell their Bitcoin, or they want to do some LBTC, DeFi thing. And what's nice about it from both sides is there's no credit risk, because like you send me 100 Bitcoin, I send you 97 Bitcoin. That 3 is our interest charge. That 97, even if I failed tomorrow, which I'm not going to, I'm going to be here for centuries, then you don't have any exposure to me because you've gotten your 97 Bitcoin back. And yeah, we've had this blessed by actually 2 different law firms. We're having a tax opinion written. So it definitely like works, but you have to have some reason that you are willing to pay 3% Bitcoin. Another thing that people do actually is like there are all these hedge funds or trading strategies or that, are getting 10% returns in Bitcoin. That sounds a little crazy to me, but people want to make LP commitments to these Bitcoin funds, but they don't want to pay capital gains tax going in. So then they do this repo, they make the commitment, they owe us 3% a year, they're earning 10%. And the reason that we as a counterparty this works with is because we're a life insurance company. Because we can say you can just keep rolling this loan forever. And then, by the way, then you can die, your kids can get the step up tax basis. So it really works for us because we're looking for ways to deploy Bitcoin with low credit risk for a long time. But it actually works for the people on the other side because they want to know that their counterparty is going to be here for a long time and isn't going to like call back the capital or go out of business.
So I got a question. If you're a success, which I think you will be, what's stopping, New York Life or some of these massive organizations that have been around for?
Yeah.
Do you think they'll ever touch this, or will it be more of something they'll lean on you guys and you guys will work, in parallel together?
No, I mean, I intend to crush them. Yeah, I mean, yeah. So, look, now we have a policy that no one else has, a product.
Right.
And I think it is like the third largest life insurance company in the world. It's, I think it's third, depends on like day to day, is a company called Ping An. And Ping An is the life insurance company for China. They were founded in 1995. Like that's an analogy we draw that like there is a new economy. It is like 15 years old and it is going to be huge. And like we're the life insurance company for that economy.
Mm-hmm.
I think it'll take 5, 10, 15 years for New York Life and Mass Mutual and Northwestern Mutual and, whatever, John Hancock to get there. But when I talk to my investors about this, I run a well-functioning life insurance company with 10 people.
Mm-hmm.
You can go to a website and apply, online. We underwrite you on the system we built. We do the policy admin ourselves. Like the durable advantage in 20 years is going to be that we're a tech, like life insurance is a tech and data company. And like we're building a from scratch tech and data company. The advantage now is we have a product that no one else has.
Mm-hmm.
But that won't last forever, right? Like other people will get there. It is going to take them a long time. But
do you also feel like it's a size thing though, right? Where you could run the same playbook, like MicroStrategy, Michael Saylor, now Strategy is running, but anyone's going to be playing catch up, right? Unless you're the sovereign wealth fund of Saudi Arabia, So like you guys are going to be big.
Having $1 trillion doesn't give you operational expertise. Like, this is probably the first time most of the people who are watching this have heard about me in a while. But we've been at it for 3.5 years. And there was a year of like figuring out all the regulatory stuff. There was a year of like building the entire life insurance company. And then we've basically been selling the product for maybe 16 months now. And yeah, that's a head start. And also we're look, we have like actuaries in the team, right? But they're weird actuaries, right? They're like actuaries who want to work on Bitcoin. Yeah. So we're currently like people hiring life actuaries that like get on with Bitcoin. For a lot of individuals who might want to found a company, for a lot of the companies you mentioned, for a lot of crypto companies, there's just this like mutually exclusive reality that if you're a person who's really interested in Bitcoin, you're not usually interested in regulatory bullshit. And if you're a person who's got like deep expertise in regulatory, they won't think of regulatory. You just like live for writing a good enterprise risk management framework. You're not the type of person who's like interested in Bitcoin. Usually there are these people exist in the world, and I've hired them. So that's why, like, I'm not really worried that a trad insurance person is going to wake up and decide to start a Bitcoin insurer. And I'm not really worried that most Bitcoiners are going to wake up and say, like, I want to slog through multiple years of legal and regulatory and compliance and risk work. So yeah, that's our sort of niche. And it's proven to be a valuable one.
It's the people we're going to bring. You mentioned miners. People we're going to bring on, like Marathon Digital. We were talking to him last week.
Yeah, Marathon's great.
And there's I think Core Scientific we connected with, and for a lot of these companies like the miners, and then you also have, public companies, Metaplanet, you mentioned, Similar Scientific, that are buying Bitcoin as their treasuries. The unique thing is that, let's say they want capital. Let's say they don't have the interest or the demand that Michael Saylor does to buy into strategies, new products. Then if you go back to the purchase parity agreements, does that mean that, like, oh, hey, if someone wants to provide them liquidity, this is 3% capital cost, and not many other people can do it because there's not many other life insurance companies that can offer the, hey, don't have a taxable event.
Yeah, I don't think there's a lot of people who can do the parity loans that we do. Yeah, I'd go back to saying, like, I think there's an evolution like what public companies are going to use Bitcoin for. And I have a fundamental belief that, like, Bitcoin won't just be gold in the ground, it'll be like money in the world. And that, I think it's going to take time for people to get there, but as we develop these debt capital markets, I think you'll start to see more and more things happening. On public companies, yeah, there's miners, there's the treasury companies. I think we're unique in the world in that I have an audited financial statement that has earnings in Bitcoin. Like, nobody else quite has done, I think, does that other than us. Like, MicroStrategies very creatively buys Bitcoin. They don't, like, earn Bitcoin. Yeah, that distinction makes sense. So I think folks will just have to wait till we go public to get exposure to, like, earning Bitcoin.
Yeah.
What do you think? You just talked on miners, and one thing I've had discussions with a lot of people and got different answers. I'd love your take. But, like, I think, what are we, 10 years out before, like, 99% of Bitcoin, the next halving, right? So what happens when all the Bitcoin, 21 million, have been mined? What happens to the economy in your opinion? Bitcoin economy.
Well, this is back to, like, fundamentally, I think that if Bitcoin becomes too much like gold in the ground and it's static and it just sits places, then it is a problem that 99% of it has been mined. Because what you're really doing is you're just putting it back into the mine.
Yeah, just
but if what you do with Bitcoin, I'll use the gold analogy, is you mint coins, and it is a coin, a currency, then it flows, right? Like, money moves. Like, some people save, some savings is turned into investment. So yeah, I really don't mean this as a criticism of Michael Saylor by any means. Like, do not think of it this way. But the other day he said that he was going to, like, burn the keys to the Bitcoin he owns personally.
Yeah.
And, like, yeah, I think that's going to be a tragedy. I mean, it's going to make my company more valuable. It's going to make all Bitcoin more valuable. But actually, if you want Bitcoin to succeed, I think it has to become more like a flow than a stock. And I believe it can, it should. It's like the world's greatest, like, large denomination settlement layer. And that's going to persist. But the way that the halvings will continue to, like, incentivize miners is in a world where people are willing to pay for transactions. And for people to pay for transactions, they have to be trading Bitcoin. Bitcoin has to be moving. This is actually, like, a deep ideological question that, like, nobody talks about. But I'm definitely, like,
we're here for,
in
man.
a camp, like, so yeah.
Question for you. I don't know if you saw this on Twitter, but I think it's a dilemma that you guys are very, like, this is something you have thought about. So you're a life insurance company denominated in Bitcoin. So people customers, putting Bitcoin in, they're getting Bitcoin out. This is Luca Netz. He's the creator of Pudgy Penguins, Pingu token.
Yeah,
And Yeah. So fairly large following. And so he had the situation where he did a deal with someone and he said, hey, pay me 100,000. The service provider, the contractor asked for 100,000. He paid in 44 ETH, but he didn't stable the money and then it fell through. And then he's sending him ETH back. So he's sending him 44 in ETH back. And so Luca Nets is saying, like, wait, like I gave you 44 ETH, you kept it in ETH, but the price has plummeted since then or dropped significantly. Do I accept the 44 ETH that back, or do I ask for 100,000, which was the US dollar denominated term? What is your opinion of what they should do? Because it was somewhat split, 54%
It's
versus
interesting.
45%.
Let me take it from our perspective, which is like we go to great pains to make it clear that like one of the reasons we denominated our entire company in Bitcoin, or the entire insurance company, is like that company doesn't even have a bank account.
Mhm.
It only has like accounts at Anchorage and Coinbase and Zodia. We didn't want it to have any exposure to dollar, so there's no ambiguity. Like this company does not take currency risk; it works in Bitcoin. So I think what's tough here is I would need to know more detail. But we go to what I would say is we go to great pains to like write contracts and in Bitcoin terms to like lend people Bitcoin to get Bitcoin back. Um, uh, yeah. I guess I'm in the way it's framed. I'm in the he owes you dollars camp because it says that like I had to pay him $100,000 and I paid him 44 ETH.
Yeah.
But I do think that if like I invoice you for 44 ETH and then you sent and you want a refund, then they can do it 44 ETH.
Yeah.
This is fun.
Here's one you might know a little better. So obvious, sorry for double
Keep
pinging.
going, keep going.
But so Altcoin Gordon, I saw your response to this. I think it was yesterday, the day before, I guess day before. And his tweet is, $1 million is only a lot of money if you're 21 or under. At 30 years old, 1 million is basically broke. 10 million gets you in the game. You can cover your living expenses with passive income from safe investments while still taking big risks. It's like, do you get it now? Your response is accurate. With inflation, 1 million only becomes 400,000 at retirement.
Yeah.
And then you're telling,
I do want to
clients,
say, I'm in Gordon's world. I obviously have the perspective to say to most people $1 million, and to myself $1 million is a lot of money, period. But I think it is important to realize the broader point, which is the dollar has inflated a lot. I mean, in 5 years and certainly in 50 years. And at the same time that you see like things are just like getting more expensive. Like there's an affordability crisis around housing, around healthcare, around these like core fundamental things. And I think that people don't have that perspective enough around these things like long-term savings, long-term retirement, like where your kids are going to be in 50 years. Look, how did I get into fintech? I graduated from college into the 2008 financial crisis, and I don't know, it scarred me. It enabled me to like think that the system is broken, and I just don't believe. Like I own a house, but I own a house because like I want to live in it. I like don't believe that it's going to be the store of value that it was for my parents and my grandparents. And to be honest, I'm skeptical that my IRA is going to in stocks. Just because stocks have compounded at 7% a year for 70 years, like um, I'm optimistic. I'm like a techno utopian. I think that we'll figure a lot of things out and there'll be a lot of growth. Um, but that is the requirement. The stock market doesn't just grow 7%. Our The economic activity of of our country and our world grows, and then the components in the stock market grow in real terms, commensurate with that. So this is what I think that I just agree with Gordon about. Like, I think 20 years ago, if you said like, oh, I have $1 million in my IRA, you probably felt like you're set and you're going to retire at 65 and you're going to be good till 85. I don't know if that, I don't feel that way. And that's part of what drew me to Bitcoin.
Mhm.
And it's part of what made me start this company, right? Like, I have 2 young kids, and there are like practical things, like I think it was Jody you mentioned, or Ali, just like managing keys. And like
Yeah.
we as a life insurance company have like a legal obligation to like make sure your kids like get your Bitcoin, right? And
Yeah.
like we're really set up for that legacy management. But legacy isn't just the mechanics of the management of your Bitcoin. It's like, how are you securing your legacy? And how are you securing your legacy in a world with a lot of uncertainty and just a very real experience of inflation over the last 4 or 5 years? And I think that having a component of your net worth in Bitcoin, having a component of your net worth in Bitcoin, and thinking of it not as an asset you trade, but a thing that you hold through a Bitcoin life insurance policy, obviously is my answer, is like part of a sensible long-term financial strategy.
Mhm. Yeah, I mean, I was looking at homes. You try to find $1 million home now. I'm out in New York, but like it's a not a nice house anymore. And $1 million home when I was growing up was a man. You'd think of it as a mansion. So this
Yeah.
is very close to home for me. We have about 3,000 people in the audience right now. We had one question come in, and I think that's probably all we'll have time for today. But in the future, we'll try to hit more Q&A. You kind of touched on this, but maybe it wasn't clear enough. But how does the price volatility, let me say that again. How does the volatility in price impact your business, or does the end user take all the price risk and reward because they are paid in Bitcoin? I gotta learn how to talk.
Yeah. So the price of the volatility of Bitcoin doesn't affect our business, and that is part of the point, right? So if you look at our balance sheet or income statement, like quarter over quarter, it's just like growing as we sell more policies and we have more policyholders. And over the course of running this business, the price of Bitcoin has ranged from the all-time high. Well, it was at 70, it went down to like touch 16,000, and it like went back up to 110, and now it's like at 85. But that hasn't mattered at all to our business. It might matter to our psychology. It matters to the psychology of our customers. But it doesn't matter to like the core premise and promise of the business, which is like, you pay us a certain amount of Bitcoin and promise you more in the future. So I think, as you said, Avi, you could get unlucky, right? You could get hit by a bus in the wrong time in the 4-year cycle, and Bitcoin's at 50,000 instead of 110,000. But that would truly be unlucky. For most of our users, the expectation, right, is they're not going to die for 40 years or 50 years or 60 years. And in that world, the year-to-year price movements, let alone the day-to-day price movements and volatility of Bitcoin, don't matter. And in some ways, um, I think of this as like a service we're providing our users, which is just like, get it out of your stock portfolio and like get it into something that's much longer term. Um, Now, how does it affect like us as a business? When Bitcoin was at like 100,000, I was able to say our business was profitable because of like how much Bitcoin we made last year. Now I can't say that anymore. So, I like could have raised a boatload of money on, January 15th or whatever. So it does affect like how people perceive the economics of our business. But fundamentally, we made a decision about structuring our business in a way that the promises we make users and the uh, the the payouts, or like the way we run the company are like perfectly matched.
I'll
Another way to
leave
put
a
it, just very simply, actually, is like if you're running a life insurance company in Swiss francs, you don't ask yourself every day, what is the price exchange rate with a dollar?
Yeah.
But if you bought a Swiss franc life insurance policy and you live in America, there's some volatility there, but like fundamentally, we're not in the business of convincing people to buy Bitcoin. We're in the business of helping people who've already bought Bitcoin, um, you know, extend their financial life with a new product.
To that point, I think one of the things that came up recently that people don't think about enough is Twitch streamer Amaranth, like redheaded girl. She lives in Texas somewhere. Robbers came in her house, 3 guys.
I want to be
pistol whipped
very
her.
clear that our security procedures require like 10 people to agree to move Bitcoin. Kidnapping me will do you no good.
Oh yeah, don't come after Zach.
Don't come after Zach.
Yeah,
But I actually, we've been talking about this, right? Like security is a thing, and there's obscurity through obscurity. Like you put Bitcoin on a wallet and you bury it in, your ranch in Texas, and no one knows it's there.
but how do you tell your wife about that? How do you tell your kids
Yeah,
about
how
that?
do you
That's
tell
the
your wife?
problem.
How do you find that
know?
management, right? So we are seeing a little uptick, not since that event, although I haven't talked to as many users in the last week, maybe, but since the Ledger guy got kidnapped and one of his fingers got
Yeah.
cut off, which is again why I want to emphasize that cutting off my fingers won't get me into Bitcoin. That we've seen an uptick of people bringing this up and saying like, actually, I sort of want my Bitcoin to be held by someone else who has the infrastructure um, and security to protect me. Uh, yeah.
Yeah. I want my kid to have it, right? So at least I feel like people need to think about that of like, all right, you could have a really good system, but if it's only in your head and not written down, how is someone else going to be able to crack that? Like it's not. Like people forget things all the time.
Oh yeah,
So,
there are these horror stories you occasionally read on like Reddit where someone's like, my husband died. Like, how do I know he had Bitcoin. Like, what do I do?
Yeah.
And I don't know. I should get one of those people to like do an advertisement or something. I mean, they've suffered a real tragedy. I mean, two tragedies, perhaps losing their husband and losing the Bitcoin. But I think it's a really real thing. And the weird thing about life insurance is you're talking to people about something that's really difficult, and like sad to think about and abstract. Um, but it's important to think about and plan. And I think one of the ways that we reach through to people who believe in Bitcoin is like this is one of the first products they hear about that really resonates with their view of the world, and isn't their uncle's financial advisor telling them to get out of Bitcoin. Yeah.
Amazing.
Gentlemen,
So I don't know if you guys can hear,
absolute pleasure.
my kid's in the background, so this is becoming more and more real for
Which
me.
is exactly, Avi,
There we
why you need a Bitcoin life insurance policy, which you can buy at meanwhile.bm. No.
I was gonna say, everyone give Zach a personal follow. Follow Meanwhile. Give BlockFuel a follow. We'll be pushing live every week on Thursdays, and super excited to have our first one on Stocktwits, and of course with you, Zach, a friend now at this point. We've been talking for a while, and really find what you're building is fascinating. So thanks so much for coming on.
Thank you. All right. Have a good one.
Yeah.
See you guys.
Cheers.